paying you $97 to join us because we're giving you a free bonus that's worth $97, right? We're paying you to come to this webinar. So think of it that way. It's a fantastic value. All right, folks. So have a great time. I hear Mark in the background. Do I hear you, Mark? I thought I did. So let me, everybody sit tight for a second. Let me help Mark get set up. And Mark from Rightline is an awesome trader with an awesome system. And Ricardo, the webinar link is www. I'll put it up for you right now. www.tradethenews.co. Okay? www.tradethenews.co. Okay? There's the link. You know I'm going to email it to you. I want to introduce one of my best friends in this business, Mark Sachs, Rightline Trading. We've been working together with them for years. They have a wonderful trading system. I highly recommend that you stick around, listen to everything that Mark has to say. He's an awesome trader, and they have a great system. And Mark, you ready? I'm going to wait till I hear him. Let me change. I'm going to give him
30 seconds.
Okay, Mark needs 30 seconds. Let me double check that link, folks. It should be www.tradethenews.co. And if there's any problem at all, folks, here's the registration for you. All you have to do is copy this. It'll get you right there. I will email everybody so you don't have to worry about the link. You're going to get an email without a doubt with the registration link in it, okay? So don't even worry about it. Mark should be ready. He said he needed 30 seconds. So I'm going to not introduce him again. I made a presenter change. Mark, whenever you're ready, you should be good to go.
Okay, I think, are my slides projecting, Lee?
Yes, I can hear you fine, Mark. So everybody get ready for Mark Sachs from Rightline Trading. And happy holidays, everyone.
Hey, thank you so much, Lee. And I have to tell you, Lee's just a great guy. They have a great system. He's super honest and transparent. He's one of the few genuine people in this business. And he really has become a really good friend to everybody here. And I consider him a personal friend, and I really like working with him because he tells it like it is. So, and there's very, very, very few people offering you software and talking about trading who do tell you like it is. Now, I'm going to start with this disclaimer. It's government required that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Rightline Trading takes no responsibility for any participation by visitors or subscribers within the futures or Forex markets, nor for any profits or losses that may be incurred. Participation in trading in the markets, as you know, carries with it substantial risk, and it should be understood that a person can lose a substantial amount of money. So participation in these markets is not appropriate for everyone. We are not certified commodity trading advisors. I would recommend that you may want to consult one before you take a trade. Just remember, you have to be very conservative, and you're always going to have a significant risk. That said, just a little bit about myself, and I think a lot of people here probably know me, but I'm a graduate of the University of Pennsylvania, I'm a former professor at Jefferson, and I published 15 peer-reviewed articles, probably over 15, I just can't remember anymore. I have them on my resume. I've been involved in the financial markets for over 20 years. And right line trading is a software program that's really in constant evolution, because we base it on the optimization we optimize the software based on indicator algorithms. And these algorithms are what's called mathematical modeling. And the modeling is created so that we can predict the future movement of price on any financial instrument on any time frame. We are one of the fastest growing trading systems on NinjaTrader, and we now use a Renko trading system, and it's really unlike any system that you may have seen in the past if you're new in the room. Now you're going to get precise, exact software-generated entries that work. We're used by many funded Top Step traders. In fact, we have a little bit of a cooperative effort with Top Step. We do joint webinars because Top Step wants to put traders in our room, because most of them do get funded. Now, as I mentioned, the system was created via the use of mathematical modeling techniques, which are computer-driven algorithms. And when I first started doing that, the computers were so primitive, I had to use punch cards. And the computer would eat a punch card and wouldn't run your program. And this is the science that was utilized to create software to predict the future movement of price in any financial market or in any time frame. And this is the same type of method that any software company uses to create new products. It doesn't make any difference whether it's for trading or for other purposes. Google and Facebook use mathematical modeling techniques to create their software. Now, as I said, it works on the futures, forex, and stock market. All indicators have forward-looking ability. There's no lagging indicators. If they don't look out into the future, they're useless and we don't use them. They lead price. They do not lag price. Because the purpose of our software, as I said, is to predict the future movement of price. We don't care where the market has been. We only care where the market is going. Now, for a long time, I used tick. I used range bars. Now, I traded a 5 range on the E-mini, an 8 range on crude, 8 range on gold. Now, the reason I like range, and it's comparable to Renko, is that both candles only are dependent on how far the market moves before an additional candle is created. If you use time, the size of the candle is going to be determined by 2 parameters. 1, the unit of time you choose, and 2, how far the market moves in that unit period of time. If you trade a range or a Renko, it's only going to be determined by how far the market moves. And I think that tick charts describe price action, give you Japanese candlestick patterns really nicely. Now, Renko, which needs to be optimized, the inputs need to be changed for each individual market and what your goals are. If you want to swing trade and take a 2 or 3 day trade, obviously the inputs are going to be different than if you take a day trade. But you can see that it obliterates a lot of price action. So trading Renko is a little bit of a trade-off as opposed to trading range. Now, what the weaknesses of Renko, and everything that we do has pluses and minuses, is that it does obliterate price action. and it doesn't tell us via Japanese candlestick patterns who's in control of the market, the bulls or the bears, at any given second. You can't see an engulfing candle, a dark cloud cover, a piercing candle, or a doji, things like that. Supposed topping patterns and bottoming patterns and trend continuation patterns. But I think I should give you a heads up on Japanese candlestick patterns. There's really, really big companies that proffer them as the only way to trade. And I think that that's become, in my personal opinion, impossible to do now. The reason is this, is that when the Japanese invented candlestick patterns 400 years ago, they made a supposition, and that was that the power of every bull equaled the power of every bear. So they made the supposition, to rephrase it, is that the power of every buyer equaled the power of every seller. And that's how they created these Japanese candlestick patterns. And 400 years ago, these rice traders created a tremendously powerful system. And 20 years ago, it was still extremely powerful. But now that algorithmic systems, and now that the institutional traders, push a button or flip a lever and start pouring money into the market, a lot of the Japanese candlestick pattern system in general does not have the validity that it used to have. So although we lose it, we're losing something that's a lot weaker than it was 15 or 20 years ago. And I would warn you about using it as the sole method of trading simply for that reason. A better way to trade is to track the direction of institutional money, which is what we do, because that changes everything. Again, Renko does not allow you to look at a rising and falling triangle or a symmetrical triangle or a bull or bear flag pattern. But these are chart patterns that are proffered, again, by a lot of software systems. They fail 70% of the time since their inception, God knows when. I mean, this is why 95% of day traders fail. These patterns have been around forever, and they've never made anyone money. And then you have people out there telling you they turned $100 into $100,000 trading 3 simple chart patterns, and those are the simple chart patterns: rising and falling triangles, breakouts, and the J pattern, all of which fail 70% of the time. You need powerful leading indicators. They're going to attract money. Now, the strength of Renko is that it does filter out noise. And if you have powerful leading indicators that get you really superior trading opportunities, you can ride the trade for a significant period of time. Now, let me give you an example of 2 full system entries. Here's one. So it's an entry. It's a software-generated long trade. It may look a little complex, but the trade went 15 3/4 points on the E-mini. Now, it's really irrelevant how far it went. What you want to do on every trade you take is take a low-risk, potentially high-reward trade. This went 3 points or 4 points, or even 7 or 8 ticks. If you can enter the trade with an 80% or more probability of getting a winner, you're going to make money in the markets. Here's another example. It's 2 trades. This one went 27 ticks, and this is, I think, this is the YM. Actually went 131 ticks here. But again, the size of the trade, you always want to put up these colossal trades. But when you get the home runs, it's great. But you take entries that always give you the potential for a full winner, where the entry itself is very low risk. And that's how you're going to make money. Now, I want to go over quickly, I want to move to the software itself, and I have to boot it. And I'm not sure how much time I have. I know that I'm the third guy to go. So it may give me the opportunity to take a little more time than Lee and Keith. But this is our three-line indicator. The first line looks at momentum, the second line stochastic, and the third line at order flow. And let's take each of them separately. Now, order flow is a very sophisticated volume, a way of assessing volume, because it breaks it down into buyers and sellers. It compares the number of buyers and sellers at any given moment to try to give you an idea of who's in control of the market. And the market delta is a very powerful number. It's a little blurry, but it's 29.85, and it tells you that on the dome there's an abundance of buyers versus sellers. It doesn't talk about executed trades. It doesn't talk to you about who's actually making a buy. It simply tells you that in terms of market depth, there's a significantly greater number of buyers than there are sellers on the dome. And you get an up close, as you would anticipate when there's buying pressure in the market. Here is a down close, but you'll notice the delta is positive. And here's the problem with market delta. It doesn't always predict the direction that the candle will close. Now, a lot of software tracks market delta, and inside each candle looks at the bid-ask disparity and tries to leverage this information to provide you with optimal entries. Now, I don't believe this has enough power to do it any level within a tick, or it could be a cent if you're trading stocks, or it could be a pip if you're trading Forex. It just doesn't have the power. And the overall market delta doesn't always predict the direction that the candle's going to close. So that poses a problem. What good is it? And the answer is it's really good. You just have to know how to leverage it. Now, here's a whole series of candles, all with the delta above them. The majority that have a positive delta close to the upside. And the majority that have a negative delta close to the downside. So the key to making a great, now this is the way most software tracks the delta. They just check the absolute value of the delta. So as the delta gets higher and higher, bigger and bigger and bigger, the number goes up. This goes up. So this is 1812. This is 29.85. It's going up. This is another green. It's going up. But this is a down close. So the problem is tracking the absolute value on the chart that you're trading has no value whatsoever. It's not going to tell you where price is going to move out into the future. So what we do is this. We look at the delta of each candle on the two higher multiple Renko charts. So if you're trading, say, a 4 Renko, we're going to look at the 6 and the 8 Renko. And if you're trading a 2 Renko, we're going to look at the 4 and the 6. We don't look at the delta of the delta value of any candle on your trading chart. And then we put those delta values into a 15-period simple moving average. Now, what that moving average does is really critical, because the delta values that close in the opposite, or the candles that close in the opposite direction of the delta, are outliers. So on a positive delta, when you get a down close, you want to, what it turns out is that what you want to use is 1 standard deviation's worth of data, or 66 2/3% of the delta data. And you want to eliminate the outliers outside that single bell-shaped curve. And by putting the delta values into a 15 period and creating a slope, what you do is you leverage 15 consecutive delta values, and it's going to give you a great idea of who's in control of the market, the bulls or the bears, by eliminating the outliers. So in both 15-period SMAs, based on the delta values of the two higher unit Renko charts are sloping up. You've got tremendous buying pressure, and the bulls are firmly in control, and the 3 line will be green. When both 15-period SMAs are sloping down, the bears are in control. There's tremendous selling pressure, and the line's going to be red. And when these two 15-period SMAs are not in agreement, it's yellow, and you can't trade. Now, it's a leading indicator. It's going to turn before price does, and it gives you an absolute direction to trade. When the order flow line is green, you try to take a short trade, the likelihood of getting stopped out is enormously high because there's buying pressure in the market. You only want to take a trade in the direction of order flow. Same here. Now, price is falling, order flow turns, you wait for the move up. This is not an entry. All we're looking at is the direction that you must trade. All these traders, these 2 candles down, 2 candles down, are trading against the direction of order flow, and the likelihood of them getting stopped out is enormously high. Same thing again, green, up you go. Here's yellow, you don't trade. Red, you must trade to the downside. Green, you must trade to the upside. Now, when the line continually changes color, you're going to get chop because neither the bears nor the bulls are in control of the market for any significant period of time. And defining chop is one of the most important things that there is in the market because it's not about the number of winners you get. It's always about the number of losers. It's the discipline you apply when you're trading, not to take a trade in a high-risk environment, which is chop. Now, when the line turns all green, you've got an absolute direction to trade. Now, when we stack these lines together, you're going to see it becomes very, very easy to define chop. Now we're going to look at momentum, which is line number 2. Now, the momentum line is fairly simple to calculate, only our calculation is really more complex, and I want to talk about the complex part of it because we're going to eliminate that on the assessment and based on what you see. So as far as we're concerned, the only thing that's important is whether the MACD line is accelerating away from the signal line or accelerating towards the signal line. It's accelerating away on the 2 or higher unit Renko time frames. Now this should be MACD line, not momentum line. When both MACD lines are accelerating away from the signal line, momentum's green. When both MACD lines are accelerating towards the signal line, and I'm sorry for these spellings here, it's red. And when the momentum lines are not in agreement, it's yellow, and that helps you define chop. Now we combine them, and now the direction has more power, and it becomes easier to define chop. When you get red, order flow and momentum, you've got to trade in the direction. When you've got green, you must trade long. Now, if one of your problems is you're getting stopped out a lot, and you're getting caught in the wrong direction, it's very likely you're not trading in the multi-time frame assessment of momentum and in the multi-time frame assessment of order flow in the manner in which we do it to eliminate those outlying market delta values that appear above a candle that closes in the opposite direction. Again, more examples. Now it becomes easier to define chop. No red, no green, stand down. Dual reds, got to trade short. Dual greens, got to trade long. Now, if it stays green, you can stay in this trade for a long time. We have a guy who's going to start our night trading room. He's going to start at 2 a.m., actually 4 a.m. Eastern time. He's going to trade the DAX. This guy stays in trades. I think he got a 90-tick trade today. Now, I want to say that what is the three line really tracking? It's tracking money flow. When momentum is consistently grinding positive, when order flow is telling you that there's significant buying pressure in the market, it's because the institutional traders have moved in with their money. And Japanese candlesticks sort of be damned, this market is going to go up. If you try to call a top based on divergence, MACD divergence, oscillator divergence, based on a candlestick, Japanese candlestick topping pattern, you're going to get run right over. Because order flow and momentum, which are footprints of big money, are telling you you've got to trade long. Now, when they don't align, you're in chop. And when they're red, you're going to get the down move. You ignore the retracement. These are traders that are going to get run over and beat up. And on the roll, you take the short trade. These are the traders trading off of Fibonacci support, oscillator divergence, MACD divergence. What they're doing is they're calling the bottom. They get a few candles, but the bottom is called by big money. Now, the last is stochastic. Stochastic is a little bit more of an elegant assessment, but to put it into a nutshell, all we're looking for on the two higher unit Renkos is when both stochastic lines are greater than 80. We don't look for divergence. We assume that the bulls are firmly in control. When both stochastic lines are less than 20, we assume that the bears are firmly in control. We don't fade the market. We trade the market. Trade in the direction. You try to fade it, you're going to get beaten up. Now, when the stochastic lines are between 20 and 80, if the stochastic line's above the signal line, it's green. If the stochastic line's below the signal line, it's red. Now, the stochastic line actually does a divergence assessment. We almost always ignore it. I'll show it to you on a live chart. We just trade in the direction of the trend. Now, when both stochastic lines are not in agreement, you're going to get a yellow assessment. Now we got three lines. And it does intra-candle assessments, which is a pain in the neck, because some of these lines are going to change color intra-candle. So we make it really, really easy. What we do is we project the results of the three line directly onto your candles. So you don't even have to look at the three line. Now, when it's aligned to the upside, I just elected to have my candle halo blue. You can make it any color you like. When it's aligned to the downside, I recently changed it from gold here to magenta. It's easier to see on my charts, and I'll show them to you. So now all you have to do is look at the candle bodies to determine the absolute direction to trade. You don't even need to look at the three line. And our goal, well, I'll get to that in a second. See here, this is a down three line on an up candle. Next candle's down, you take the short. Can't take this long trade because you're in a downtrend. I don't have 50 and the 15 up, so I don't have market structure, but we only want to trade short. There's the up candle with a down three line. Order flow, stochastic, and momentum on a multi-time frame basis have already rolled. Price is going to roll. This is a candle you can't take long. Three line is to the downside. Wait for the down close, and you trade short. Now, if the workspace is going to be as clean as possible, and you don't need to look at the three line, a lot of traders like to leave it in, but I get rid of it. I make it transparent, and it disappears. Now the only thing I need is the data from the candle halo on my entry. Here's my entry long. I've got the three line, order flow, stochastic, and momentum, and I go up. Here's my long, and I go up. Now, if I want to take a counter trend trade, which I don't do, you would at least have to wait until this assessment turned to the downside. Here's again, same thing, entry short. Now you could take an entry long here, but we're not going to trade against the trend. No entry here. 3 line. This is black, means you have no 3-line alignment. No entry long. No 3-line alignment. There's your 3-line, short. So your 2 low risk, high reward trades here, all the way down, here, all the way down, are the only entries on this chart as I project it. These little moves are not going to make you any kind of decent money, and they come with substantial risk. The only thing you want to take are the ultra low risk, potentially long running trades. And those are these 2 short trades. You're going to stand aside on everything else. Now, I want to talk a little bit about our oscillator. The oscillator is the only indicator on the chart that uses data from our trading chart. Now, it's not absolutely required as an entry, but the entry signal does decrease risk. Now, here's the oscillator signal. Long, up. Long 3-line, up. Long 3-line, up. Now, here's your best trade right off the 50. Long 3-line, up. Here's your short trade. Oscillator, short. Oscillator, short. We only trade short below the 50, long above the 50. And here's how the signals are generated. Now, this is an exponential oscillator because price on a Renko chart doesn't move arithmetically, it moves geometrically. I mean, on a reversal, it may take 25 ticks to get a reversal, but all it would take is 4 ticks to form each new candle to the downside. So when price is here, it stalls. When price gets here, it starts to speed up. That's geometric movement. Arithmetic movement is where the speed that price moves is always constant. Here it's not always constant. So the oscillator is an exponential oscillator. So we take the oscillator formula, raise it to the second power, so that the oscillator line here is very fast. And when it crosses this magenta line to the upside, get an up triangle. When it crosses the magenta line to the downside, you get a down triangle. Up triangle, down triangle. And it's uncanny how most of these triangles are going to come right at the start of a new trend. Now, we acknowledge on the platform that no market moves the price of a market does not move in isolation, that there is an interlinking of markets, and that if you don't take that into consideration, you're going to have a problem. I can promise you. Irrespective of order flow, stochastic, and momentum, you also have to take into account the direction of markets that move either in the same direction as your market or in the counter trend direction. And this is sort of a small neural net. Now, let me give you an example. See these dots? These dots, this is the E-mini, and they're tracking the direction on a multi-time frame basis of the NASDAQ and the Russell. So when you take a long trade on the E-mini, it would really be great if the NASDAQ and Russell were also moving up with you on a multi-time frame basis. Now, these dots are required to take a long trade. You need the 3-line, order flow, stochastic, and momentum. And in addition, you need validation that the NASDAQ and Russell are moving in your direction. Try to take a long trade on the E-mini when the NASDAQ and Russell are falling, and you're going to have a problem. Now, usually the 3-line and the dots have a strong correlation, because if we're tracking the footprint of big money and the 3 lines align to the upside, you're usually going to get an alignment of the Russell and the NASDAQ to the upside on a long move, but not always. Because remember, these are day trading charts, not swing trading charts. Over very short periods of time, weird things can happen, so we need these dots. Here's another example. On this short, the dot tells us that the NASDAQ and the Russell are moving down with us on this E-mini short. Very, very helpful. If this dot was green, we'd have big problems taking an E-mini short. And it would be unlikely we'd have the 3-line with us. But this is just another independent predictor of us getting a winner. Same thing here. Here's the oscillator entry. We've got a dot. Oscillator entry. We've got a dot. No dots. The Russell and the NASDAQ are moving in chop. The E-mini is most likely to move in chop. So it all starts to fit together like the pieces of a jigsaw puzzle. And I'm going to show you live charts in a very short period of time. Now here's an example of where you get red dots on a long trade. Now that trade is very unlikely to go anywhere. There's your oscillator signal. There's your dot validation and your short trade. There's your oscillator, your dot validation, and your short trade. Now there's no long trade because of the dot. Now the oscillator gives a short signal, but the trade is censored by the dot. No dots, no trade. Now, in order to increase the success of the system, we expanded the dots into 2 time frames. So now we still call them dots, but the X is essentially a faster moving average on the NASDAQ and Russell on a multi-time frame basis. And the circles are, the M&Ms are a slower time frame on the NASDAQ and Russell. A dual dot entry with an oscillator signal creates a very, very low risk trade. I'm just going to skip these because we're going to go to the live charts. Now let's look at the dots and the 3-line. You see the halo is gold. The 3 lines aligned to the downside. A dot's validating the short trade. You know you're trading in the direction of the NASDAQ and the Russell, and down you go. Can't take a long trade, even though the 3-line is telling you you're aligned to the upside because of the dot. Keeps you out of a long move. And you can't take a trade to the downside because even though you have a dot, you don't have the 3-line. Now, if you don't trade with this kind of diligence and precision, you're going to get stopped out a lot. Now, you're going to miss moves that work. But that is irrelevant. When a trade sets up and you're in it, you want it to go. There are going to be moves that happen that just don't have the software's permission for you to go in. Stay away from them because they're very risky entries. I'm just going to, now each market as a expansion of our neural net, we know that each market has correlative markets that are assessed in a different way than the dots. And those are our quant lines down here. And all they're doing is looking at, on the E-mini, 9 markets. And they're assessing, are they going up on a multi-time frame basis or down on a multi-time frame basis? And this is an easy way to understand the principle. In the course of a given day, institutional traders don't really move any money to cash. All they do is they move their money from asset class to asset class. When risk is off, they're going to pull their money out of the E-mini. They're going to pull their money out of the NASDAQ's going to drop, the Russell's going to drop, the Dow is going to drop, And where is that money going to go? It's going to go into bonds. It's going to go into notes. It's going to go into precious metals. It's going to go into certain currencies. In other words, the money doesn't evaporate, obviously. It goes somewhere, and they're simply moving it to safer investment vehicles. So we look for these lines. This is the key line. But red tells us that the markets that should fall when the E-mini falls are falling, and the markets that should go up when the E-mini falls are going up. And that money is hemorrhaging out of the E-mini. Here's another example of money flow. And when there's no alignment, institutions are not at work. They're not putting their money into the market. There's no clear-cut buying pressure or selling pressure, so we stay out. So if you put it all together, you get an oscillator signal, Russell NASDAQ in your direction, order flow stochastic and momentum in your direction. That center line here is your key line. Money flow out. You've got yourself a great short trade. There are a lot of traders in the room that'll take this down for 85 ticks. All aligned and set up. All the different independent variables or independent predictors of price movement. And they're all separate. They're all doing a separate assessment. And they are not looking at price on your trading chart. They're looking at higher time frames, or they're looking at other markets. Here's another trade. This is not a great short trade because you don't have the dot on the entry. Not a short trade. You have a long dot on the entry. Here's your entry. Up. Whoops. Up. Whoops. Kind of screwed it up here. Up. Here's your entry. No three line, no trade. Here's a small winner. Now keeps you out of every loser. That's our goal, is to protect your capital and only get you into winning trades. And this is the kind of trade, you're not going to get that often, but it's a $3,800 60 trade. It's an enormous trade on 4 contracts. It's on the E-mini. I didn't scale it, but it's a gigantic move. Another move up. The 3 money flow, green, green, green. Russell NASDAQ moving up. Order flow, stochastic and momentum up. All multi-time frame assessments, and up you go. Now, here's the oscillator giving you short signal. We don't trade in the counter trend direction. This works. I don't care. We don't trade short above the 50. And here's the full chart. Now, I'm going to move off these. Let me give you the offer. I'll go back to it, and then we're going to go to the live charts. Now, it's normally $3,000 for a lifetime license, and we're going to discount it to $1,399 for the lifetime license, and it's active on stocks, futures, and forex on any time frame. You're going to get 1 month in the live trading room with me. You're going to get 10-module weekly educational training, and you're going to get all our videos, which are 450, and the first 5 will get a one-on-one mentorship session with me. Now, it expires Sunday night, December 23rd. Now, I just want to really, I know a lot of people hype this, and I don't like the concept of this, but I just want to give you a heads up to what we're honestly going to do. This comes with all upgrades and add-ons. Now, we have a system that we're going to automate. It's not this system directly, but it's a very similar system. Now, you're going to get that automation automatically because you get all free upgrades and add-ons. And that system's going to be a $2,000 system. As we add on to this system, you're going to get the add-ons and upgrades. Starting in 2019, we are ending that because we give away too much free software. We have a computer programmer here full time who's incredibly well trained and who's very expensive. And he'll work 100 hours of time to create a new add-on or upgrade that we give out for free. So if you don't purchase in 2018, you will always get an upgrade of the system. If we make the system better, you're going to get it. But you are not going to get add-ons. And I want to make that clear, because in 2019, we are never giving out free add-ons to the system. If we improve it, you're going to get it. If we have an indicator that we create that makes it better, we're going to give it to you. But if we create another system, you're not going to get it. In addition, we're only going to sell the system for stocks, futures, and Forex separately. You're not going to get all three at once, because the dots, the quants, and all of the configuration it takes to be able to trade all three of those is an enormous amount of work on our part to configure on your end. And we're not going to do that anymore. You're either going to buy the platform configured for stocks or futures or Forex. This is your last opportunity at $13.99 to get all of that together. The stocks and futures and Forex and upgrades and add-ons, which will include our automated system, which is going to go live in January. So I don't want to beat a dead horse, but this is not sales pitch. We're not doing this anymore. After 5 years, we've been giving away $10 million worth of software that costs the company a lot of money to make. We're not, so that's over. Now let me go to a live chart really quickly. I want to get out of this. Now just give me 1 second to boot it. I'm sorry I don't have it booted now. And as soon as I'm done with the live chart, I'll answer any questions you have, because I think you're going to be really impressed. Anybody can show you JPEGs. You know, it's real simple. I can show you whatever I like. But when the pedal hits the metal on the real charts, to be honest with you, and just give the system a second to boot. This is a more simplistic system. This is a trade on the euro pound for 29. I put ticks. It should be pips. This is a short trade on the euro pound again, 33 pips. Long trade here, 34 pips. It works great on Forex, and because you get this additional service, you're not going to be put in indefinitely, but you're going to get a free month in the in our night room, which is starting on January 3rd or no, January 2nd. If you feel like getting up at 4 o'clock in the morning, you're going to trade the DAX, which is a great market. You're going to trade the Forex, which is fabulous, and we've got a great trader who's going to moderate that room. He hasn't had a losing day in 3 months, and I know that to be true because he sends me his control panel. Now the system's only works on Ninja, but you can use many other platforms and trade off of them and power them with your platform. If you have thinkorswim, your data feed will power Ninja. You get the signal on Ninja, you take it on thinkorswim. There's a lot of others that work too. I just can't remember all of them. You'll have to call us, but we have an API for thinkorswim. There's another data feed. I'm trying to remember the name of it, but I can't think of it. Hold on, let's Rory. Yeah, Awanda. Awanda works, and a lot of traders use Awanda as their data feed. That can connect to Ninja and power it. You can trade off a demo. You don't need a live, and it will work perfect. And You just take the signals on your live platform. You'll have plenty of time to enter them. Now, we should be booting soon here. My control center's up, so only a second away. I'm just approaching 1 hour, so I'm not running a ton over. And then if there are any questions, I'm going to answer them. Now, today I had a rough day in the trading room because I had 14 charts open, and there was so much volume that my charts kept freezing. And it nailed us on I couldn't get 2 winners, and I took a trade, and the chart froze, and the trade went 9 ticks on the E-mini, which is 2 targets. Should have made us $200 plus, and it hit us with a full loser because my whole platform was frozen. So we had a tough day today, but I closed 12 charts, and now the only charts I have up are the charts that I'm trading. And it was my first losing day in a long time. But we should have been 3 and out. And I'm going to show you the trades. Let me drop that. Now, we configure the whole system for you. You don't have to worry about putting it together. It's way too difficult for you to upload and configure. Sergio will do it for you and make sure the system is running perfectly. Let's put the offer up until here's our phone number. 786-713-5276 if you want to call us. Our email is at info@rightlinetrading.com. Here's our website, which we're in the process of completely redoing. Or after the first of the year, we're going to have a much nicer website. It's actually going to give you really good information. One we have up now is kind of like an Edsel. So that's going to change. All right, the chart should boot any second. I'm sorry. I should have had these charts up. I don't want to waste your time. And sometimes I talk about the false gurus. I redact the names. Learn my 3 favorite stock trading patterns. This guy turned like $500 into $5 million in 6 months or something. These are the guys that you don't want to pay any attention to. All right, that's an advertisement. Now here are the charts. Now there's a little bit more to them than what I said, which will teach you. But I'll show you the entries on the E-mini. Hold on 1 second. I put so much drawing stuff on here. Now, the one indicator I did not talk about, which I want to mention really briefly, is the multi-time frame alignment of your trading instrument. This dark green is when we want to trade. That's when we have a multi-time frame alignment of the E-mini to the upside in the strongest fashion possible. And it's a very important indicator. If we go to the beginning of the day, now the platform is really simple to learn. Now, we took these trades. Here's our key line right here. This is our key money flow line. We need this line red. Any additional lines we have is just gravy. The background bias tells us that we're in a multi-time frame downtrend on the E-mini. The dots tell us that the NASDAQ and the Russell are banging down with us. Right here. Now, here's a pivot. We always trade around pivots. Because pivots, our pivot indicator is pretty remarkable. You see price bounces, then it breaks. Now, this is the pivot breaking candle right here. 2/3 of this candle closes below the pivot, and we're in. This gave us 4.75. Now this doesn't have the 3 line, so we can't enter. Now I'll show you the morning, the trades we could not get because we had a frozen platform. Now when the background is clear, we don't trade. Now we took this trade. Well, let me just go to the ones that the platform froze on, because they were heartbreakers. One was really early. I shall find it. All right, we opened, and this moved down. Could not get. Now we're clear here. Now this was an entry right here. Now I need to work with you to tell you why it was, but this is an entry right here on a frozen platform. We've got the fast stops. We've got the pink background. We've got our money flow indicator. It's a little bit more of a sophisticated entry, but it's a real simple one. Here's the line. We've got 3 of them. This was a winner we couldn't get because our platform was frozen. And that was a 14-tick trade. Then I took this trade right here. Pivot breaker. Trade went, actually I went in here. I jumped a trade that is not the pivot breaking candle. It was the next one. And I was lucky. And the trade went 9 ticks. Platform froze. And this gave us a $225 loser. And it should have been a $200+ winner. I mean, you can't trade when your platform, and it was my fault that it froze. I had 4 million charts up. Now here's another entry, and it's an entry you're going to get, and it's easy. It's coming right off a dual support. This is the open. This is the VWAP triple support. Here's the modified. Here's our 15, and here's our 3rd winner, and we're done for the day. And what we were sitting with was 1 loser. So we had a really tough time. But you can see how the dots, the background bias, the money flow, validate the direction of the trade. If you trade with pink background, when the higher time frames are falling on the E-mini, they're going to fall on your trading chart. Remember, that background is not looking at price on your trading chart. It's looking at the 2 higher Renko time frames. All you need to do is find a great short entry. That's your goal. Let's look at crude. When there's no background, we don't trade because our 2 higher time frames are not aligned. And we got this trade right here. $40 pips, 40 ticks. I took this trade for 6. It was too risky. Shouldn't have taken it. And then we did have a trade right here. No, it's right here. Here's our key money flow line right here. Background bias is pink. Got a pullback on the trade. I was in here and we went 12 right to support. That was a loser. Went 4 ticks and took me out. So this is the full system. You get some really nice entry signals that I want you to see, and then I'm going to have to answer any questions. One of them is these are all smart entry signals. And let me show you, and they don't occur very. Now, you see the oscillator signals right here. They need to be confirmed with money flow, dots, background bias. All of them do. But, see, I eliminated all my other charts so nothing freezes. If you want to see something else, I'll be happy to dial it in for you. But every chart is unique. These dots are NASDAQ Russell. The dots on the YM are the E-mini and the NASDAQ. The dots on the NASDAQ are the E-mini and the on the Russell. These correlative markets are all different on every single instrument, which is why we're not going to offer every single, all stocks, futures, and forex. Again, now here's your trades, right here on this dark pink. There's your pivot breaker. And remember, you don't need a lot of trades. You just need the probability of a winner to be exceedingly high when you get in. And there it goes. And you've got 32 ticks. Here's the next trade. And this is early in the morning. But what's operational early, here's the pivot breaker. You wait for 2/3 of that candle to close below. And then you're in. And you go right to support. 17 ticks. Can't take these trades because they're just too congested. Right here's the pivot breaker. Now, what you see on crude, you're going to see on every single market. They all move the same. Here's 28. Here's 17. This one is 32. This one is 17. This one is 28. And then you're going to go for a period of time where you don't have the pink background. So you just don't trade. Don't take anything. Then when you get your green, you look for a long entry. There's your long entry right there on the pullback. See the wick? You don't get a full winner. I mean, you don't get a million targets here. But here's your entry, and there's your winner. On 9 ticks. We're very hard pressed to find the loser that meets our criteria for a trade, because it's hard to get them. But if you trade 2 instruments, you're going to get a ton of them a day. So let me answer any questions you have. But this is the full platform. We're assessing multiple time frames, multiple instruments, and just let me show you one entry that I really like. It's this entry. You see this line here? This is called the continuation entry. And what this does, now both of them work. Now, you don't have permission to take either trade because our key money flow line, which you'll learn really quick to watch here, is not red. They work anyway. And if you open up the indicator, you're going to see that what it does is a multi-time frame assessment of a range chart. It looks at the 13 range and the 8 range. And when you get a pullback on the range, it gives you an entry on Renko. So it's very cleverly constructed because remember, range and Renko, what determines how far they move is only price, not time or not ticks. So you can use range to some extent to help you with Renko. And that's why you have a 13 range placed into the parameters on the long period. And then you have a short period, which is going to be your 8 range, and it's going to give you a signal on the Renko. It's a very, very powerful signal. Despite all the other stuff, both of these trades work, but you still really need confirmation of that trade. When you see it and you've got everything else with you, grab it, because it's a great, great entry. Now, let me see if there are any questions. Hang on. Let me find them. I don't see the questions box at all here. I see chat and attendees. Let me find where the, hang on one sec.
Hi, Mark. Can you hear me okay? Mark, you can't hear me?
Okay, I'm sorry. I
Okay.
had,
Can
okay.
you hear me now, Mark?
I hear you. Now.
Okay, let me go through the questions for you. Can everybody else hear me okay, folks?
I was just showing two winners right here for 9, right here for 5.25 points. This is right off the right edge of the chart. With the
I can
continuation.
wait till you're ready, Mark. You
No,
do
no,
whatever you
I'm
want.
totally ready to leave. Just go right ahead.
Okay. So give me a second. I wasn't
No
I gotta
problem.
scroll back.
Okay.
Arnold is asking, is this an order entry integrated, or does one have to physically enter the trades?
No, you have to enter the trades. And the entering the trade is real easy because if you look on the right edge, it tells you where the bar is going to close to the downside and close to the upside. Now, right here, right at the start of the formation of this short candle, you know that if the candle matures to the downside, you're in. So what you do is you put in a sell stop order right here, one tick below the close of the candle, and you just let it when the market's moving so fast, it's pushing this all away, and it'll take your trade and then run on whatever automatic trade management strategy you have. But you have to enter the order. This is not an automated system. We're going to be automating this system in January, which will be an add-on for you for no charge in this year, but not next. So I hope that answers your question.
Okay. If he asks another one, I'll tell you.
Okay.
John asks, did you finish the Ninja 8 update yet?
Yes. All you have to do is call us, and we'll put it on your computer.
Okay. George asks, how do you know when to get out?
Well, you know what we do, George? What we do is we give you a trade management strategy. That's a great question. A trade management strategy based on the average true range of the instrument going back 6 months. So to give you an example, on the E-mini, we trade 3 contracts. Now you can trade more or less. It doesn't matter. Our first target is 5 ticks. 1 contract out. Our second target is 8 ticks. Second contract out. Our third target is 12 ticks. And the trade's over. And the trade is over. So it is a relatively conservative management strategy. If you want to take the additional risk, what I would recommend that you do, and we can program it, is take this off at 16. Look for another point. I like to get this trade out, and this is what's already in my automated as part. And let me give you an example. I'm gonna hit OK here, but let me take a trade. If you hang on 1 second, I'm going to set up our entry instrument, and I'm going to take a trade, and I'm going to show you exactly what happens. So here's the E-mini. It's going to come up. Okay, I'm just going to hit connect. So let's say I want to take a trade at the close of this candle to the upside. I buy an up close. There's the target. It's already set. You see it? It's that magenta line.
Order filled.
It's filled. And you see my targets? They're already set up for me. The whole thing, the stop, target, 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 is already pre-programmed. So that's how you know when you're stopped out of the trade. And now here's the register. We're making money. I just took this trade, willy-nilly here. Look at this. We're going to get a full winner out of this trade. But you can see it's all automated. The trailing stop is automated. Everything is already automated. I'm just going to close the trade.
Target filled.
Okay?
Okay, I got a couple more.
Okay.
Fitzroy asked, what are you trading?
Crude in the E-mini.
Okay.
What I have right up here.
Dave asks, the dots had 2 colors, light green, dark green. Light red, dark red. What's the difference between the colors?
Okay. Great question. And they actually have 3 colors. Right here. These are the dots. Dark red, light coral, pale green, yellow green, and dark green. The darker the green and the darker the red, the more powerful the trend on the time frame this is assessing. Now, if you see these, this is a great trade. See, this is continuation right here on this pivot breaker here. This dot and this dot, even I just call them dots, even though one's an X. They're the darkest red, which means the Russell and the NASDAQ are in the strongest downtrend mode. Now, the thing to look at is their color on entry. On this entry, you had the faster time frame, darkest. You had the slower time frame, intermediate. Still a great trade. Now, you can change the colors if you want. And let me tell you, you must have dots on your entry. You've got to trade in the direction on the E-mini of the Russell and the NASDAQ. On crude, it's taken us, it took us so long to figure out what markets correlate. I can't give you that, but you must have dots on these trades. And the great trades are going to evolve when you have at least one dot, usually dual dots, like right here. And this crude trade, honest to God, is the kind of trade where you can, you back the truck up because it's almost going to deliver the money out of the bank. And this is a very big trade. It's 28 ticks. So those are the kind of trades, the darkest dots, dual, break of a pivot, but you don't need to have dual dark. As long as you have dual dots, you've got yourself a nice trade. But that's very, very good to point out. And if you like, you can change these colors if you want. Those are just my default colors. But if you want to discriminate better, you can do that. So I hope that answers your question.
Okay. Wave asks, how are exit targets placed after an entry is in?
Okay, well, I think I just showed you that.
Okay, it's fine. Sorry.
It's just a different approach. It's all automated. We're going to program that. I just want to add, Lee, we're going to program that in for you. We're going to give you our recommended automatic trade management strategy based upon the volatility of the instrument. For crude, we're looking for a much bigger move than the E-mini. Okay?
Yep. One more, I believe. Does this deal include the trade scanner?
The trade scanner. Hold on a minute. Hold on a minute. Let me ask Rory.
Okay.
Yes, it does.
Okay. That's the last one, Mark.
Okie doke. Listen, thank you, Lee. Thank you so much.
Thanks for being part of it. It was awesome.
Okay, thank you. And listen, everyone, thank you so much in the room. If you have any questions, we're here all day. And I really appreciate your time. I ran way over, and Lee's been really, really kind to moderate this and tolerate my my extra time.
Hey,
So
Mark, if you want to post your phone number or tell me what it is and I can post it for you?
Yeah, no, I have it. I'll show it to you. I'll show it to you.
Okay, I'll throw it up for you.
It's right here.
Oh, good. Okay, that's great. So everybody, there's Mark's number.
Yeah, 786-713-5276. We'll send you a purchase link if you'd like to come aboard. I try to make money every day in the room. Today I did not make money, and it was because we had a jammed platform, and you can't have 14 charts open at the same time. I'll tell you that right now, and that's what I had. 786-713-5276. So listen, have a great afternoon, and again, Lee, thank you so much. Take care.
Okay. Mark, Dr. Keith, everybody for staying so long. I really appreciate it. Have the greatest of holidays, everybody. And you know what we say. We'll see you in the trade room. Take care, everyone. Have a great holiday.
Bye-bye.
Bye.